Welcome back to Charged Alpha. I'm Hudson Thomas, joined as always by my co-host Lana Chen. In this segment, we're zooming out from the quarterly noise for a full company chapter.
That's right, Hudson. Before we dig into the latest earnings, let's make sure we actually understand this business. What it does, how it makes money, and what makes it competitively distinct.
Monolithic Power Systems was founded in 1997 by Michael Hsing, an analog chip designer who had worked at Maxim Integrated.
Power management semiconductors regulate voltage and manage energy flow between batteries and processors. They determine how much heat a device generates, a critical performance variable in dense computing environments.
MPWR went public in 2004 as a small analog semiconductor company. For over a decade, it built across consumer electronics, communications, and industrial equipment before AI changed its growth trajectory entirely.
Revenue today splits roughly 42% enterprise data and AI servers, 19% automotive, 19% consumer electronics, 15% industrial, and 5% communications equipment.
The AI data center segment has been the growth driver. AI servers consume far more power than traditional computing infrastructure, and efficiency of each power component matters enormously to hyperscaler economics.
Gross margin runs approximately 55%, and operating margin around 25%. The 3-year revenue compound annual growth rate has exceeded 30%, driven by enterprise data acceleration.
The structural advantage is MPWR's proprietary BCD semiconductor process, bipolar, CMOS, and DMOS combined in a single chip. This enables power efficiency levels that standard fabrication processes do not achieve.
When hyperscalers design an AI server platform, they select power management components years before launch. Once MPWR wins a design slot, that revenue stream runs for multiple years with very high retention rates.
Automotive is the second major moat. Automotive-grade components require multi-year certification and, once certified, generate revenue over 5 to 10-year vehicle platform cycles, among the most durable streams in semiconductors.
MPWR operates fabless, designing chips but outsourcing fabrication to foundries like TSMC. This keeps capital requirements low while providing access to the most advanced semiconductor process nodes available.
Michael Hsing has been CEO since founding. He holds deep technical expertise in analog IC design and drove the product strategy that positioned MPWR in AI infrastructure well before most investors recognized the opportunity.
Competitively, MPWR faces Texas Instruments, the dominant analog chip company, as well as Analog Devices and Microchip.
Return on invested capital runs around 25%, reflecting the efficiency of a fabless business that earns high margins without large manufacturing assets. Capital intensity stays low relative to revenue generation.
Products are sold in 40-plus countries with design centers in the US, China, Taiwan, and Europe, allowing MPWR to serve automotive OEMs in Europe and consumer electronics manufacturers in Asia simultaneously.
The AI infrastructure investment cycle is creating a multi-year tailwind. Every additional GPU server requires power conversion chips, and MPWR's hyperscaler design wins position it to capture a meaningful share.
Key metrics to follow: enterprise data revenue growth, automotive design win ramp, and gross margin trajectory. Those define whether the AI tailwind is translating into durable, high-quality earnings power.
That's the company chapter for Monolithic Power Systems. Now that we've got the full picture, let's get into the earnings.
Time to dig into the numbers. Let's go.
Monolithic Power Systems reported Q4 2025 revenue of $751 million, up 20.8% year over year. Non-GAAP EPS of $4.79 beat the $4.74 estimate. The AI data center power thesis is no longer a forecast. MPWR's high-efficiency power management ICs are designed into Nvidia's GB200 rack systems today. At $1,334 per share, the stock sits 18% below a consensus target of $1,580.
Monolithic Power Systems, founded in 1997 in Kirkland, Washington, designs analog and mixed-signal power management ICs. Its chips control voltage and regulate power distribution inside data center servers, electric vehicles, and industrial systems. MPWR's differentiation is efficiency, reducing power losses and heat, which grows more valuable as AI data center power density escalates.
Trailing 12-month revenue is $2.79 billion. Market cap is $65.5 billion at $1,334 per share, a premium reflecting AI infrastructure positioning. Debt is just $4 million. Net cash is $1.25 billion. Beta is 1.48. Dividend yield is 0.5%.
Q4 2025 revenue of $751 million grew 20.8% year-over-year. Non-GAAP EPS of $4.79 beat the $4.74 estimate by 1.1%. GAAP EPS was $3.51, the gap reflecting stock-based compensation. Revenue growth has averaged above 20% for 5 consecutive quarters on a trailing basis.
Gross margin reached 55.2%, well above the 45 to 50% analog sector norm. Operating margin was 26.6%. Net margin was 22.1%. These margins reflect MPWR's ability to price on performance. The efficiency advantage of its power management ICs commands a premium in AI data center procurement.
Free cash flow on a trailing 12-month basis was $664 million. Operating cash flow was $838 million. The gap reflects capital expenditure for test and assembly capacity scaling. At $65.5 billion market cap, the free cash flow yield is approximately 1%, compressed by the premium growth multiple.
Balance sheet, cash of $1.26 billion, debt of just $4 million, net cash of $1.25 billion, effectively zero leverage. Book equity is $3.53 billion. MPWR has grown organically without balance sheet risk, a rarity in high-growth semiconductors, where acquisitions typically bring leverage.
Valuation is demanding. PE of 105 times trailing earnings. Forward PE approximately 65 times. EV to EBITDA 80.5 times. Price to sales 23.5 times. These multiples price in 20 to 25% CAGR AI infrastructure growth for multiple years. The stock sits 18% below the 1580 consensus target.
Q1 2026 results are due May 7th. Consensus expects revenue above $800 million, continued 20+% growth. The critical data point: AI data center revenue as a share of total. If that segment accelerates beyond 40% of mix, estimates move higher, and the multiple is supported even at current levels.
Analyst conviction on MPWR is near uniform bullish. 17 buy ratings, 3 holds, 0 sells. The consensus price target of $15.80 represents 18% upside from the current $13.34. The unanimity reflects confidence in the AI data center power thesis. MPWR is not a speculative AI trade, but a supplier with design wins in shipping hardware.
The primary analyst thesis is power density escalation in AI data centers. Nvidia GB200 NVL72 rack systems consume 60 to 100 kilowatts of power per rack, roughly 5 to 8 times the power density of a standard server rack. Managing that power efficiently requires analog ICs with specifications that commodity solutions cannot meet. MPWR's design win position in GB200 creates locked-in revenue with Nvidia's next-generation production cycle.
Analysts tracking the AI supply chain note that MPWR's content per server is expanding. In a standard server, power management IC content is approximately $50 to $100. In an AI GPU server at GB200 density, MPWR's content is estimated at $300 to $500 per system. As the installed base of AI servers scales, that content expansion is the revenue compounding mechanism analysts are modeling.
The bear concern on the street is valuation. At 105 times trailing earnings, MPWR leaves no room for execution misses. If the AI data center CapEx cycle moderates, whether from hyperscaler budget discipline or a macro slowdown, MPWR's growth rate decelerates faster than the multiple adjusts. Analysts with hold ratings cite the entry point risk rather than any concern about business quality.
The automotive and industrial segments are underappreciated diversification. MPWR supplies power management ICs for EV battery management systems and industrial automation controls, markets growing independently of the AI cycle. If AI spending moderates in 2027, automotive and industrial can partially buffer revenue growth, a diversification option the market is not fully pricing into the current 105 times multiple.
The bull case is AI power density as a secular trend. Every AI accelerator generation, Hopper to Blackwell to Rubin, increases compute density and power requirements. MPWR's engineering is several design cycles ahead on next-generation architectures. That technical lead creates a moat commodity analog suppliers cannot close in 2 years.
Near zero debt plus $1.25 billion in net cash gives MPWR the flexibility to acquire analog IP, accelerate R&D, or initiate a buyback, none of it priced in. The balance sheet is a free call option on capital allocation that has not yet been exercised.
17 of 20 analysts at buy, 18% upside to 1580. If hyperscaler AI capex holds above $200 billion annually, MPWR's design-in position compounds revenue above 20% through 2027. The entry price at $13.34 is below where consensus sees fair value.
The bear case is multiple compression. At 105 times trailing earnings, MPWR is priced for perfection. Any AI data center spending moderation, a hyperscaler capex pause, tariff supply chain disruption, or macro budget compression compresses the multiple from 105 toward 50 times. That compression alone implies a share price near 600, a 55% drawdown.
Texas Instruments and Analog Devices are competing for AI data center power management. Both have broader manufacturing capacity and lower cost structures. If either wins a design slot in the post-Blackwell GPU generation, MPWR's content per server advantage erodes. Design wins are defensible for 1 to 2 hardware generations. Beyond that, competition intensifies materially.
The $1,300 share price limits retail participation. Management has not signaled a stock split. Institutional concentration means any large holder exit creates outsized volatility, amplified by the 1.48 beta, a liquidity risk for investors entering at current levels.
Customer concentration. If AI data center is 40+% of revenue and heavily Nvidia weighted, any Nvidia production delay or architecture shift creates a demand air pocket. MPWR is embedded in GB200 now, but Rubin generation qualification is ongoing. A design loss there would be a significant negative catalyst.
Texas Instruments, ticker TXN, is the largest analog peer by revenue. TI trades at approximately 25 times forward earnings versus MPWR's 65 times. The gap reflects TI's slower growth in industrial and automotive markets versus MPWR's AI concentration. TI's scale provides stability. MPWR's positioning provides growth premium.
Analog Devices, ticker ADI, is the high-performance analog peer. Following its Maxim acquisition, ADI has the broadest analog portfolio in the sector. ADI trades near 22 times forward earnings. The market explicitly pays a premium for MPWR's AI data center design wins over the broader analog group.
Nvidia is both the primary customer and indirect benchmark. Nvidia's GPU architecture roadmap sets the power density specs that MPWR engineers to. As Nvidia scales revenue, MPWR's design and position scales with it, making Nvidia guidance the most important leading indicator for MPWR's forward trajectory.
Vertiv Holdings, ticker VRT, is the data center power infrastructure peer. Vertiv sells rack-level power distribution and cooling, complementary to MPWR's chip-level management. Both benefit from the AI power density trend, but with different margin profiles. Vertiv hardware systems versus MPWR's higher-margin chip business.
MPWR's options market is active given the $1,300 price and 1.48 beta. Pre-Q4 earnings, options priced a move of 8 to 10% in either direction. Put-call ratio was approximately 0.7, moderately bullish. Post-results, call volume concentrated at the $1,400 and $1,500 strikes for June and September expiry.
Institutional positioning sits in large-cap technology funds with AI infrastructure mandates, typically at 3 to 5% of fund weight. The 18% gap to the 1580 consensus target is wide enough to attract new buyers who missed the initial AI power density trade at lower price levels.
CEO Michael Hsing, who co-founded MPWR in 1997, sells periodically through structured 10b5-1 plans, routine liquidity, not a directional signal. No material open market purchases or unscheduled sales have occurred at recent price levels.
MPWR pays a 0.5% dividend yield, modest but growing. The company has raised the dividend annually for 6 years. With $1.25 billion in net cash, a buyback initiation or dividend acceleration would be a re-rating catalyst. Neither is priced in at current multiples. MPWR is the purest AI power density trade in analog semiconductors, designed into Nvidia GB200 racks, growing 20%, near zero debt. At 1334, 18% below the 1580 target, 17 of 20 analysts see upside.
The multiple demands execution. At 105 times trailing earnings, any AI capex slowdown compresses the stock hard. Watch Q1 results. May 7th. AI data center mix and gross margin above 55% are the two gates that keep the bull case alive. Financial data and charts, sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh, we do! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.